So let's take a look at the next one on this top 10 list by Lewis. MasterCard. All right, yeah, let's take a look at MasterCard. I mean, do we have to take a look at MasterCard? I think everybody kind of knows like what's up with MasterCard. Wow. Okay, so that literally almost looked like the exact same chart. I kind of like had to go back and double check. MasterCard. Oh my god. It looks like these dubs are pretty. It's like pretty much the only time that MasterCard ever goes down is when the whole market takes a dump. What can I really say about these guys? Not exactly sure. They all kind of look the same. MasterCard not making it back up to its highs yet. On the weekly, looks like it's ready for action on the daily. Just kidding. Yeah. It's MasterCard, guys. It's MasterCard. I mean, what is there really to say about this, Let's type this in on this thing. Alright, here we go. MasterCard 305.26. Says it's near fair value here. That's pretty funny, near fair value. I don't really know, guys. It's like a lot of these stocks that he's recommending, they're already like, they've already is super growth stocks. Like, they've already grown. All right, click, 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 click. Okay, guys. So here we are, looking at a MasterCard again. Right, so let's take a look at the fundamentals for MasterCard. The price to earnings ratio is hovering like at 40. That's pretty high in my opinion. It seems to be, this is one of the top things that people hold in their like mutual funds or something like that, I think. So technically, if everyone's selling, this thing's gonna dump. It's statistics. Let's take a look at some of these statistics. Price to earnings, terrible. Let's see. They have a 46% profit margin. That is huge, guys. That's insane. I can't even believe that. Return on equity, 147. Return on assets. Looks like these guys are doing pretty well here. Gross profit, 16.88 billion. That's insane, guys. Can't even believe it. Total cash on hand, 10.68 billion. Total debt, almost equaling out with the debt here. Book to value, $5 a share. I mean, you got to think about this too, guys. Like $5 a share, you're paying $304 here for $5 a share book value. They've got a 0.5% dividend. Is this a solid company? Yes. Is this the type of company to buy back when there's pullbacks? Yeah, pretty much. Is this a growth company? No. I don't think MasterCard has more room to grow. I'm kind of more into like growth stuff, guys. I like growth stuff, high dividend stuff. And these are pretty much just companies that aren't gonna go bankrupt and aren't gonna like have all their shares dump or something like that. So I'm not exactly sure if I would be looking to pick up MasterCard. Let's go to the next one on the list. Oh, this is SUI, Sun Communities. It's an REIT. I've been looking into REITs a lot lately, and I'll do another video on that. Basically, this is like a growth company for me. I think it has lots of room to grow, especially with the boomer demographic moving from working age to retirement age. I know that there's a high percentage of boomers that are going into retirement and literally have like zero to no savings. Zero to no savings. They're relying on Uncle Sam. I mean, is that a dangerous thing for America? Yeah, I would say that's a dangerous thing for America. Is that a dangerous thing for boomers? Yeah, probably a dangerous thing for boomers. Is it a good thing for companies that specialize in mortgage and real estate operations that are geared towards manufactured homes, RV communities? I've seen a lot of the retirees and stuff like that hanging out at like these types of establishments, these types of areas. I think that it will continue that trend, and I believe that manufactured homes, small homes, tiny homes, RV communities, trailers, that's basically where the next boom is going to be as far as baby boomers and their economic cycle, their point in the economic cycle. Let's take a look at SUI here. Pull it up on the charts, guys. All right, SUI making some decent moves off here. Looks like it's kind of like more where it doesn't exactly just follow the trend of the S&P as much. It looks like it's just kind of continuing back on its trend that it had here, that it had held. I was looking to pick this up, guys. I actually am kind of kicking myself right now because I've been looking at this for a while, and I totally could have gotten in. Not a big deal. Looking at it on the daily, we have pretty much average volume here. Seems to be maintaining volume. Maybe perhaps picking up a little bit of volume here. Like for example, is that a trend? I don't know. I know you can't draw on the volume thing, but let's try, right? We've got the stochastics kind of just doing like a little bounce thing on the daily. Let's see. Weekly looks okay. Monthly, it looks like it's bouncing, guys. It looks like this might be doing okay. Damn, this thing sure is consistent, isn't it? Yeah, I was looking at this because it's it seems to be a growth sector for at least for me. I feel like it's going to be a growth sector. Let's take a look at these numbers here. I was looking at these numbers earlier, guys. Excuse me. I had a long night. Alright, so 4% up on the day. That's great, guys. We've got the price to earnings ratio at a terrible 121 price to earnings ratio. How did I not already know that? This is, however, guys, I'm gonna have to tell you right now. This is a dividend stock here. This is a dividend stock. What I was going to try to do as my play with the stock was I was going to purchase some of these, and my strategy was going to be a covered call. I have the 52-week. I'm sorry, the dividend here. Where are the dividends? Dividends are they're only about 3%. You know what I mean? What guys? Look at this operating cash flow here. Look at this free cash flow. Right? Look at this. 127 billion in revenue. You know, 3.96 billion in debt. Doesn't really look that great, guys. Honestly, now that I'm looking at it, debt to equity 102. You know, so it has 100 times more debt than the company's actually valued at. I mean, doesn't really seem that great, guys, but maybe this is not the stock for me to get into. Maybe I need to get into some other ones. I was looking at a lot of REITs. This was just one of the many that was on there. So, guys, I'm not sure with such a high price to earnings. I'm not sure if it's worth it for me to buy the stock. Price to book multiple 3.7. Guys, not exactly looking so great out here. Let's take a look at one of these articles about it. I kind of feel like taking a look at one of these articles. All right, so it looks like they've got a hold of some of the SEC 821.13F filings. I'm not sure if this is the best time to buy this, guys. I'm definitely going to have this on my list just in case there's a pullback. You know, how are they using this? I don't really see that. It looks like they're kind of like backing off this area here. It looks like they're kind of like they're liquidating their investments here, guys. That's what it looks like. I would keep this on the watch list. Yeah. 13.8. Okay, so there's this company right here, Waratah Capital Advisors, has almost 10% invested. Almost 9% invested in this company. Waterfront Capital Partners is very bullish on this. I think this is one that I'm going to have to keep on my list and kind of like look out for. If there's another drop, guys, I might pick this one up just because I know that people need a place to live, you know. And if we are going through any recessionary type of situation, it's going to be a lot of people that are going from normal family homes, multifamily homes, stuff like that, and they're probably going to go into smaller, more of like a lower cost, price point type of home. Manufactured homes is perfect for that. It's the perfect. It's like the ideal candidate. For example, if all right, guys, let's say I live in an apartment or something, right? I'm living in an apartment, and I need to downsize. I need to downsize and go to something that's closer to a price that I can afford. A lot of times people will move into these trailer park type of communities. So I'm going to keep this one on my list, and it's on my REIT list as well. So I'm gonna take that with a grain of salt, guys, and let's move on to the next one. All right, guys, the next one is Darden Restaurants. I don't know if you know Outback. They've got, what do they have? Olive Garden. True. Do they have Trulux? I'm not sure. They have a big restaurant portfolio which spans across multiple tiers and multiple categories in the restaurant business. So, guys, let's input this into the chart and let's see. Darn it. Guys, Darden's not made the type of recovery that some of the other stocks we've been looking at have made. Darden looks like it's holding on for dear life right now. Okay, will this come back? Will this come back? I don't know, man. The charts, it's like, guys, it's so hard to do this right now. The charts all look pretty much exactly the same. Yeah. It's like after 2018, everything just like got on. After 2018, everything was like on autopilot up. And then 2019, you know, after 2019 was over, that's when we started getting the hell. Started getting the hell in the markets, guys. Am I trading a lot right now? No, not really. I've kind of just I've got a position in volatility. I've got a position long on the market. I trade options against these two. You know, one of them's my long term. One of them's a short term for me. Let's put Darden in on here. Alright, guys, Darden's up about 1% on the day. Wow, insane. The low was 54. That was a 50% dead. Alright, guys, price to earnings ratio on Darden is looking incredibly good right now. That's a great price to earnings ratio. Let's see what they got to say on the news here. They're touting McDonald's as a better buy. They do have Olive Garden. So I knew they had Olive Garden. Alright, guys, let's take a look at some statistics here. Let's get to the good stuff. Yeah. Alright, so we've got a price to book ratio of 4, price to sales ratio of 1. Price to sales ratio of 1, that's pretty good. So, guys, you know, you could be paying $1 for every dollar that they bring in. That's pretty good. They've got a pretty small operating margin, pretty small profit margin. Guys, that's normal for the restaurant sector. Revenue per share, 71.68. Yo, what's up? That's pretty good. Quarterly revenue growth. I'm not gonna look into that, guys. We are in weird times right now. I'm not sure what's happening right now with the whole global situation. They've got a terrible debt to total cash. You know, current ratio 0.41. You know, they have. This is how much they have in cash compared to their debts, guys. Book value per share 19. Okay, so check this out, guys. They do have some dividends. You know, are they a dividend player here? Perhaps 83% held by institutions, 0.3 held by insiders. So what is this? Like a retailers are the ones that are holding this stock? That's interesting. Retail is holding a lot of this stock. And you know, I'm not sure if that's a good sign or not. Honestly, I'm not sure if that's a good sign. I think I'm gonna leave that here. I'm gonna leave that. I'm just gonna leave Darden. See you later, Darden. You know, could you get back up to 90? Absolutely. I would love to see it get back up to 90 because that's more shorted. Let's move on.